Hello and welcome to Your Stocks on CNBC-TV18 in the Mumbai News Centre. I am Hormus Fatakia. It's been a good day for the market so far. It's the weekly options expiry as well for the Nifty Bank today. But the Nifty, after making a new high, now is trading close to the mark of 24,300. And the Nifty Bank, though, that is the one that is in the spotlight. It also made a new record high in today's session, now slightly off the highs of the day, but still trying to hold on to the gains of close to 2%, almost 1,000 points higher on the Nifty Bank. And the gains led by IDFC Bank and almost every other banking stock also contributing very well for itself in today's trading session. The broader markets also underperforming in absolute terms, but they are also doing well for themselves. The mid-cap index is up 0.5%. The small-cap index is also up around 0.75% as we speak. Plenty of stocks that are moving around in the broader markets. The PSUs continue to do well. IREDA made a new record high today. Mazgaon Dock is at a record high. So all of these PSUs doing well in today's session. The PSU Bank Index as well doing well for itself. But joining us on the show today is Rajat Bose of RajatKBose.com and Shah, Director at Tracom Stockbrokers, to answer all your queries. Gentlemen, good afternoon. Thank you so much for joining in. First query of the day comes from Bharat Kapoor, who's writing to us from New Delhi. He's holding 18,000 shares of IDFC First Bank at 63 rupees. Now, he's a long-term investor and he wants to know whether he could buy more shares at current levels. Parthiv is very much in the money. He bought it at around 63. The stock trades at around 80 rupees. But the stock has been trading around these levels for quite a while now. What should the viewer do? Should he accumulate more at current levels or wait for a slight dip and then add on to his positions?
Good afternoon, Hormas, and good afternoon, Rajat. I think it's a brilliant buy. And one of the reasons why we feel now this bank should do extremely well is that we know for the fact that IDFC First was originated thanks to the merger from Capital First, which was the NBFC run by Mr. Vaidyanathan, with IDFC Limited and its banking operations. And it had a lot of legacy issues, a lot of wholesale assets which had gone haywire, as a result of which I think there were a lot of write-offs done. And, for the next leg of growth in the retail assets, IDFC First Bank had to continuously raise capital and dilute equity. Their diluted equity, I remember, even at levels of 2021. And until very recently also, they were successfully able to raise a lot of capital with very marquee names on it. So now I think the positioning of the bank is looking extremely good. I think the asset mix is extremely good. They have one of the best names in the industry, and PPOP are also very, very strong. More importantly, I think going ahead, there is a good chance that the credit cost should also start to decline. And all of this in terms of valuations, if you look at on an FY26 basis, it is at around 1.7, 1.8 times, which I think is not extremely pricey. And probably we have seen in the market that there's been a lot of fancy for mid-tier or the frontline public sector banks. And a lot of private sector banks, I think, have kind of been laggard in this rally. Our sense is, I think, the next leg of growth for the banking sector, such, I think, private sector, mid-tier private sector banks should do extremely well, which is where IDFC First Bank is certainly open.
Right. What are the charts indicating then, Rajat? The stock sometime in September last year made a high of around 100 rupees and has been in a bit of a decline since then, has not managed to retest those levels. What are the charts suggesting? What are some of key levels that you need to watch out for?
The key levels would be 82 to about 84.50. If this range is taken out decisively, then a fresh upswing can happen. Otherwise, it is in a range-bound situation since April. And the range between 75 and 85, it is hovering around, except for the days when the market fell very sharply. It went down to below 72. What I would like to say is that personally, I also track banks and I prefer a 1.75 return on assets for a minimum. And this is far away from that as of now. But it is definitely going to be a good bank going forward. But if you were to buy a bank, better get the ROA above 1.75. Look at the top class banks like HDFC or say ICICI and others. They are maintaining above that level. Of course, this is a new bank. It will take some time. Definitely, it will move up. But as of now, you have to be a very long-term investor in order to buy and hold a large number of stocks, large number of shares in your kitty.
Interesting. 82 to 84, some key levels to watch on IDFC First Bank. But moving on then, Bhaskar Dev Mukherjee is written to us from Pune and he's holding around 50 shares of Titagarh Rail at around 1118. Now he's asking if he can hold these shares for a 2-year time horizon. Now, Parthiv, this stock has been a rank outperformer. It's almost tripled, if we know, in value over the last 12 months or so. If he has a 2-year time horizon, would you think that this stock has the legs to compound further in the next 2 years?
So no doubt it has had a brilliant run thanks to the fact that the order intake in terms of the wagons and the railway rolling stock has been stupendous. And a lot of metro-related work has been happening in a lot of states where I think Titagarh wagon has been a key beneficiary of such ordering. So I think the momentum is extremely strong. The company is looking to grow its top line and bottom line at the rate of 20-25%. And I have no doubt that over the next 3 years, they will be able to achieve. As a matter of fact, I think last quarter was a historic quarter for them because I think the revenue run rate crossed 1,000 crores. So the company is executing extremely well. They have added new capacities, which is also a good thing. But if you look at the recent run-up, I think the valuations aren't cheap. I think if you see the valuations quoting at trail multiples of around 75, 80, which is, I think, surely pricing in at least, if not more, 1 or 2 years of good growth. So if the gentleman has just a 2-year horizon, I think I'm really tempted to suggest to book profits out here. Only if somebody has a horizon of upwards of 3 years, then probably one can hold, especially if the cost is so low. But because the gentleman has just 2 years horizon, I would suggest a sell.
Interesting. Rajat, do you agree with that? Because the stock has almost gone from 500 12 months ago to almost 2,000, now at around 1,800. The buy price is somewhere around 1,100. But for a 2-year time horizon, should he hold on, or considering the run-up, he should book profits here?
What I would like to say here is this, that if you look at the daily chart, at least the parabolic move since mid-April or a little earlier than that, from the levels of around 780, it started moving up, and now it is 1770, almost 1,000-point run in such a short period of time. So my suggestion is that, see, from the levels of around 200, it was in 2023 March. It is now 1,800. So 2 year, 3 months, you are getting roughly about 9 times. So given this kind of a move, what I foresee is that either it will fall sharply going forward, or it will go sideways. You look at SRF. SRF, 2 years back, when it was climbing up this way to 2,800, everybody felt that it will go up to 3,500 or something. But these kind of stocks, once they stop moving up, that would be the problem. So if I were in his shoes, I would at least book part profits. Otherwise, if one wants to carry on, then one can carry on, but do not expect any stellar returns from the current levels. And Parthiv says that 2 years of growth is already priced in. I would say that it could be more than that. I wish you people look at the weekly chart at least once.
Interesting from Rajat and Parthiv as well. Book part profits, if not more. But moving on then, Siddharth Diwan is writing to us from New Delhi. Now he says he wants to buy some fertilizer stocks, and he's asking if he should invest in Chambal fertilizers. Parthiv, the entire fertilizer space has been buzzing through and through the month of June. There's been a lot of talk ahead of the budget, and I guess that's always the trend, right? Every time the budget comes in, the fertilizer stocks are always in focus. Is fertilizer a theme that this gentleman should be investing in? And if not Chambal, then what are the other stocks that he could invest in?
Oh, yes, certainly. I think fertilizer as a theme certainly looks good. Good part about this particular sector is the valuations are not extremely stretched. No doubt, I think a lot of good talks regarding some reforms that the governments could take, and also I think the relief in terms of the GST rates. Not only that, I think so far so good. I think the monsoons have been pretty decent. The spread of the monsoons have been encouraging, and hoping for the fact that the second half of the monsoons also turn out to be good for the country. I think that will certainly spur up the demand for the fertilizers, because a lot of inventories are have been destocked, and it seems that good days are ahead for these companies. In terms of picks, I think we are very comfortable suggesting complex fertilizer makers, something like Coromandel International. A good way to play Coromandel is also via the holding company, which is EID Perry, which has a very good core nutraceutical business and sugar business. And it's an extremely well-run company and a company from a very good group, Murugappa Group. They've created stupendous value for shareholders. So EID Perry, looking at the SOTP in terms of the holding that they have in Coromandel, plus their core business, is looking extremely compelling to us.
What about you, Rajat? Is there a fertilizer stock that looks good on the charts?
It has also moved up considerably. At least it has almost doubled from the levels of around July 2023. So mostly in 1 year, there has been a good move. But here I would not say like Titagarh Rail that you need to book profits immediately, because it shows that there is a possibility that it might still move up. And I would put a stop loss below 440 and continue to carry on. But I wouldn't really buy at current levels in 515, because even this stock, as I just mentioned, that it has also had a very good run. So one would rather stay put, but any fresh entry, if anybody is considering, I would say wait for a dip at least to 450 or so, then you can move into it.
Hold on to positions, but fresh entry not advised. Wait for a dip before looking to enter these fertilizer stocks, jumble fertilizers in particular. But Pachi is writing to us from Chennai, and she's holding around 45 shares of Nestle. She purchased at around 24.83, and she wants to know the prospects of the stock from the short to medium term time frame. Now, Parthiv, Nestle is not a stock that moves very quickly in, say, in a 1 or 3 month time frame. But since this viewer has a short to medium term time horizon, what would your advice be?
For a very short to medium term horizon, I think I would blindly go with what Rajat advises. But purely on a fundamental outlook, I think this company has a great future over the next 3+ years. And why I'm mentioning 3+ years is because we know for the fact that the company's already made very bold statements that over the next 3 to 4 years, they will be increasing their gross block and doing a capex of almost 5,000 crore, which will almost nearly, if not more, double their gross block. And this is a company whose parent we know the fact is one of the world's largest FMCG player. And there's still so many products that they can explore in India. And they've been pretty innovative. They've grown the volumes pretty reasonably well. And despite the fact that there has been rural stress, I think their urban segment has performed pretty well. Our sense is that going ahead, as and when the rural also tends to pick up, I think Nestle has been focusing extremely well on the premiumization strategy. May it be Maggi, may it be Nestle, or the chocolate division, which is Kit Kat, Lactogen, and the cereals division. I think they are focusing on great products. Our sense is that it's a great stock for long term, but short to medium term, I think it could stay on the sideways thanks to the valuation, which are a little expensive right now.
Right. What are the short-term charts suggesting then, Rajat? Because the stock may have done well in the last 1 month. It's up around 8%. But when you check a year-to-date chart or a 6-month chart as well, the stock hasn't done much. What are the charts indicating here?
First of all, a caveat. Take my view with a pinch of salt, because I am also an investor in Nestle. So my views could be to that extent predilected. But I would try to give an objective view. That is, it has still about, January 24, it was also rising in a strong move from 2100 or even lower to a high of about 2700, 2769 to be precise. And after that, it gave a correction to roughly about 2400. And now it is in a range-bound situation. But Nestle being Nestle, I believe it will still move up because phenomenal return ratios, return on capital employed is pretty high. Pretty high means very high. And I think as per screener.in, it could be above 100 also, the return on capital employed. And the other thing is that Nestle is a quasi-monopoly, leaving aside Amul. Most of the baby foods are sold by Nestle. So a monopoly gets a monopoly kind of price earnings. But over a longer period of time, one can expect good appreciation here. Same expectation even I hold for my purchases. So I would say put a stop loss below 2400 if at all you need a stop loss, and carry on.
A stop loss below 2400 and carry on. Parthiv, Rajat, stay on because there are more queries to answer, but we'll take a quick break here on your stocks. More on the other side. Stay tuned. Back with us on your stocks, and Rajat, Bose and Parthiv Shah are still with us to answer your queries. And the next one comes from Paramasivan Arunachalam, who's writing to us from Mumbai, and he's holding 50 shares of L&T. And the purchase price is somewhere around 3,600 rupees a share. Now he wants to know whether he could hold the shares for the long term. Rajat, on the charts, what are the charts of L&T suggesting? The purchase price is somewhere close to the current market price itself.
What I see is that L&T has had a major run from 2022 to about 2022. It was 1,500, and then currently it is 3,600. So just as I said about SRF, or if you look at the IEX chart, IRCTC chart, similar kind of a pattern is here. So L&T may continue to move sideways. What I foresee is that, say, between 3,200 and 4,000, this will be the range for L&T, and it will continue to consolidate because it has been rising, say, from 1,000 levels from COVID to current 3,500 or 3,600 levels. It will take quite a bit of time before another major upsurge happens, because over the last few months, the kind of movement it is showing is that some people are booking profits. Some people are definitely entering too. That's why it is not falling much. But this will continue for quite a bit of time, just as my classic example of SRF.
What about you, Parthiv? The entire engineering, infrastructure, construction space has been in the news for a while now, but L&T is much more than that, right? It has a gamut of businesses, the conglomerate that it is. Do you think the prospects are still remaining bright for the longer term?
Absolutely. On a longer term basis, I think we are no doubt that the infra space, and especially L&T, as you rightly mentioned, has multiple verticals like infra, hydrocarbon, precision engineering, defense, and also via the subsidiaries, the financial services, and also the IT services business. I think it's a fantastic conglomerate to hold on to in such a super cycle. If you look, last year, they have taken almost 3 lakh crore worth of orders. And the current order book kitty is sitting at around 4.7 lakh crore. I think this is on a historical high, and they've guided for very seamless execution. If you see the vision they had, which ends sometime in FY26, I think they have done extremely well in terms of improving the net working capital cycle, which has come to around 12% of their revenue, which is, I think, a brilliant thing. Not only that, I think our sense is that going ahead, I think the only concern that the street has for L&T is the margins, because I think the guidance that they're given for the margins for FY25 kind of did spook the street initially. But I think there is a genuine problem in the industry regarding the labor shortages. They are working on it, subcontracting, things like that. But our sense is that despite the margin issue, I think overall the guidance looks good. And going ahead, they might even be upping the order intake. That is where we feel that L&T for the next 3 to 5 years looks like an extremely good stock to hold on to the portfolio.
Indeed. And moving on now, T.S. Prasad is writing to us from Hyderabad, and he's holding 100 shares of Tata Elxsi at an average price of 7,800 rupees. Now, he's a short-term investor and wants to know whether he should book his losses or stay invested. Now, Rajat, the current price of Tata Elxsi is well below the viewer's purchase price. What do you think is the short-term chart suggesting? Does it have the legs to go back to 7,800, or should he book his losses here?
Would say that Tata Elxsi might just go to those levels that the investor wants, or his purchase price, that is 7,800. Because even though Tata Elxsi has seen a major correction since early 2024, in between it was range bound between 7,800 and say 7,600, and then failed to something like 6,600, came back, and still languishing. But Tata Elxsi, being an enterprise R&D company among the software makers, it's I suppose already whatever was to be discounted on the downside for its non-performance in the recent past, that is already done. Just as lots of stocks their upsides are already discounted in my view, this one's downside has been discounted. I would say one should continue to hold on to the stop loss below 6,800, carry on 7,800, definitely going to be there because its pedigree is there. The kind of jobs it does will definitely go up there.
Interesting there. So moving on then, Shivaji Ragala is writing to us from Visakhapatnam and he's holding 150 shares of India Cements with a buy price of 295. Now he's asking whether he should stay invested or switch over to some other stock. Now Parthiv, India Cements, the entire cement space has been in the news, but India Cements in particular, what do you suggest? Now the current price is below his buy price. What are the prospects for India Cements now that Ultratech is also interested here?
See, I think the investor might have looked into the Ultratech news and jumped a lot. I think early days, no doubt, Ultratech has taken a substantial stake and all the speculations regarding the change of promoters, etc., is there in the market. One has to note that, whosoever will be the buyer in India Cements in the long run, I think they'll have to invest a lot of capital because a lot of their plants and machinery are kind of outdated and old. So a lot of modernization capex will go through, and it won't be very easy to create a lot of value from here. And I think the price at which India Cements is quoting at in terms of enterprise value and the way the company has been performing, I think in terms of efficiency, a lot of its other players in the south have done lot better. We are not very gung-ho on this stock at these levels, despite the big move by Ultratech. Our senses, I think there are better plays, cheaper value bets. Names like KCP, I think looks extremely compelling. Ramco Cements, I think also looks very good in terms of cement plays of the south. So I think we are better off suggesting the investor to go and look into these names vis-a-vis India Cements at this juncture.
All right, Parthiv, Rajat, thanks a lot for joining in today and answering all our viewer queries. Parthiv, Shah and Rajat Bose there answering all your queries. But that's all we have on this edition of Your Stocks. But do remember to email us your queries and we will address them with our experts. Stay tuned for Closing Bell on the other side for the last hour of trade.